Time now for our 2-minute drill. Joining us is Dory Wiley, President and CEO at Commerce Street Holdings. Dory, good to see you.
Good to see you.
You pretty much think it's more or less a done deal that we're in a recession of some description, I guess. What does that mean for your investment posture at this point?
Well, we are. You know, if you saw the GDP now numbers, they've been adjusted down to a minus 2.1%. We still have 3 weeks to go, and there's a good chance, based on history, that number is going to be adjusted down more. Given the 1.5% loss in the first quarter, we're decreasing our economy growth at a increasing rate, so that's a problem. Now, on an investing side, it creates more fear in the market. There's not enough hikes in the rates yet. The Fed's looking at 75 basis points coming out next month. That's still, maybe a 2.5% target. That's below the 10-year. We need a yield curve inversion before the market is comfortable in saying that, hey, the Fed is dealing with this correctly. In the meantime, that creates some really good buying opportunities in the stock market.
Yeah, I'd imagine you'd be looking at certain stocks or areas where they've already kind of discounted something pretty tough. Pioneer Natural Resources, pretty timely given what's going on in energy. What's the like here?
Yeah, I really like that a lot. You know, oil is falling off. Anytime oil falls off because the news is based off demand, that's a good buy signal, because we don't have a demand problem. We have a supply problem. The Secretary General, unfortunately, passed away, of OPEC, passed away Tuesday night. And his last public comments were the industry faces problems in the output, which is supply, due to years of underinvestment. You know, that's a good clue right there. So when we look at something like the Permian, which has a lot of independence away from the government, and someone like Pioneer, maybe the biggest producer out there with the lowest cost of break even on a well, you know, that stock is trading at a single-digit EBITDA multiple, which is incredible. You know, it's 6 times. Then you buy that stock based off of forward projections for 2022 at $100 barrel oil, you're getting 13%. If oil did go down to $60 a barrel, the company projects, you'll have 8%. That's a great yield.
Yeah, and exactly, an 8% dividend yield at the moment. Now, Micron, real interesting situation here, because they had a bad revenue guide, and yet the stock did not fall apart.
Yeah, it didn't, because they beat all their numbers, right? And at some point, there's a bottom and there's a buy signal, and I think Micron is it in technology. But, you know, there's a lot of negative fear based off of inventory and demand and semiconductors. And here you have a company selling for less than 3.5 times EBITDA. A private equity company would do anything to buy that if they could. Probably too big. So I think that's a really good buy signal for Micron. And it's probably oversold here.
Could be, yeah, an interesting tell on exactly how earnings and guidance come the second quarter reports are ultimately received. We'll see how that goes. Dory, appreciate the time today. Thank you.